In recent years, cryptocurrencies have evolved from a speculative curiosity to a cornerstone of modern investment portfolios. As of August 2025, Ether, the digital currency powering the Ethereum blockchain, soared to a new all-time high of nearly $4,950, pushing Ethereum's total market capitalization close to $600 billion. This surge reflects a growing wave of institutional investment and renewed optimism among individual investors. The momentum behind crypto is not just about price movements, it's about the global shift toward digital assets. One of the biggest turning points has been the changing regulatory landscape. In April 2023, the European Union implemented the Markets in Crypto Assets Regulation, known as MiTA, creating a unified framework for crypto assets across all member states. This regulation doesn't just protect consumers, it gives investors greater confidence by holding providers accountable and reducing the risks of fraud and money laundering. Meanwhile, in the United States, support for cryptocurrencies continues to grow. The Trump administration has established a strategic Bitcoin reserve and created a dedicated role, the Crypto Czar, to oversee and nurture the digital asset market. These regulatory advancements have helped legitimize cryptocurrencies, paving the way for broader adoption and integration into the global financial system. For investors, this translates to more transparency, better protection, and fewer uncertainties, making digital assets a more attractive option than ever before. We're also witnessing a notable shift among wealthy investors, especially in Asia, where there's increased demand to include more crypto in diversified portfolios. This trend highlights a broader recognition of cryptocurrencies as a legitimate asset class, not just a speculative gamble. With Ethereum and Bitcoin leading the way, digital assets are increasingly seen as a way to hedge against inflation, access new technology-driven markets, and tap into the future of finance. But perhaps the most compelling reason to have some money in crypto is the potential for outsized returns. While the market remains volatile, the upside for early and informed investors can be significant. Unlike traditional markets, crypto operates around the clock and is driven by a global community of innovators, developers, and investors. This constant activity creates dynamic opportunities for those willing to do their research and take calculated risks. Of course, it's crucial to approach crypto investments with caution. The market's volatility means prices can swing dramatically in short periods. Regulations are still evolving, and not every project will succeed. That's why experts recommend starting with a manageable allocation, typically a small percentage of your total portfolio, while staying informed and monitoring regulatory developments. In summary, the landscape for cryptocurrencies has changed dramatically in recent years. With Ethereum reaching historic highs, new regulatory protections in place, and institutional adoption accelerating, the case for holding at least some crypto has never been stronger. Whether you're seeking diversification, growth, or simply don't want to miss out on the future of finance, now is the time to consider adding digital assets to your investment strategy. Missing out on this rapidly evolving market could mean passing up on substantial opportunities, and that's a mistake savvy investors are choosing not to make.